With Foot Locker just releasing earnings, I think that this is an appropriate time for me to comment on the latest news and the latest earnings. The stock went down by about 27% on less than stellar earnings. We will take a look at some of the lowlights and some of the highlights and talk about this dividend stock. And as you can see, it's really evident just by looking at stock price that they continue to pay out dividend, and that's a strategy of theirs. We see 5.3% yield right now, and we don't see compounding in the business. There's no compounding built into the stock price as they continue to pay out earnings to shareholders. There's not a whole lot of expansion to be had, maybe some in Asia. But if we look at just revenue numbers, we see declines in America, flat in EMEA, and an increase in Asia. So definitely not a growth stock, definitely more a company where we need to look at value. And we see price to earnings ratio being quite low right now. When I looked at this stock and decided to buy, price to earnings was 7 something and stock price was in the high 20s. But I think with recent drop here from earnings, there could be potential to overperform just average market returns going forward. Let's take a quick look at some of the appendixes here from the slide. We see in the news from, for example, Foot Locker here, that they comment on there being a risk of dividend being pulled here, quarterly dividend of 40 cents per share. Let's take a look at the earnings from this quarter, 0.38. So 2 cents short of the dividend. But if we do some of the accounting tricks, we see some greater profits. However, you can't pay out investors with accounting tricks. You need solid cash. But in this case, we can see that the cash flow is being tied up into inventory. So this is in millions of American dollars. These numbers that you see on screen right now. Looking at assets, we can see merchandise inventories. So for the same quarter here last year, they had 1.4 billion in inventories, and we can see that now it's up to 1.7, so quite a substantial increase. And this means that they're gonna have to do some sales. They're gonna have to put half off on some shoes, and in my case I will be sure to go down to my local Foot Locker and pick up some discounted shoes. That's the way I like to buy clothes, when they're severely slashed in price. I hate paying full price for clothes. So this will free up some cash for Foot Locker, and they will be able to pay out shareholders, but it will come at the cost of lower gross margins, and that's not something that investors like. However, just looking at the news, this is some fear mongering in my opinion. I think that the risk of dividend cuts is greatly overstated. I think that we will continue to see some growth from Asia. I think that EMEA will continue to be flat. There's good traffic at the Foot Locker. When I walked by, it was like that in Copenhagen as well. And please also let me know in the comments below, do you see a lot of traffic at your local Foot Locker, or is the store abandoned like a ghost town? I'm curious to know. We also see in the earnings slides that Foot Locker talked about their digital strategy and their digital footprint, meeting consumers where they are looking for shoes. So this is also something that can be positive. However, as for many consumers, like myself included, I like to go down to a local store and try out the shoes. We can look at some trends also here. So for example, we see sneakers, new shoes. I put in trainers there as well. I think we can change that to shoe store near me. Alright, we get too little results here. I think that this would be better to not use on worldwide, since the whole world doesn't necessarily speak English. However, just sneakers here and new shoes, we can look at the trend. Sneakers clearly rising. This is indexed. This is something that you can use in your own due diligence if you're trying to understand search trends and consumer behaviors better. This is trends.google.com. You also get some additional data down here with related queries. Don't look too closely at these, since I set the time interval to past 5 years. This will not be super relevant, but maybe if you're looking at apparel and you see a breakout query and it's related to some sort of brand, please let me know in the comments of my videos if this is super popular and people are looking at it and the stock price has not exploded yet. Well, then maybe there's potential to find a company that makes a product before the valuation starts to increase a lot. And we all love to make money. That's why you're subscribed to this channel, I hope, because you want to make a ton of money. And that's why we look at stocks together and try to find good buying opportunities to make a ton of money. Alright, so that was just some comments on the trend regarding Foot Locker. Let's see if there's anything that's interesting in this article. Oh yeah, they commented on the decline of the revenue, but as I stated earlier, this is largely due to North America. Harder to justify dividends. Remember, we took a look at the numbers, 2 cents short on earnings per share to pay out dividend, and they can free up more cash by doing sales and slashing inventories. So I think that dividend is justified in my opinion. I don't see the company slashing dividend just because of one bad quarter in this cyclical industry. Alright, that's basically the end of the news article. Quite a short article. I just brought this up to do a video on it and talk about the media coverage on Foot Locker earnings. I don't read the Motley Fool. I just brought up this article for the making of this video. It doesn't give me any value as an investor to look at this type of financial news. The real value is in this type of report that you see on screen right now, where you can see the strategy about the digital footprint, them wanting to separate some of their brands, talking about high-level strategy going forward. And you can think for yourself whether or not this makes sense, if you think that it's a sound business strategy and if you believe in the company. And we can also look at the numbers here in this case. That gives a lot of value too, to see how the inventories are starting to pile up. And just to comment on this, in general, this is a very bad sign for apparel companies. So I think that smart investors are also discounting stock price as a result of this. If we see this in clothing stores, it's a bad sign. This is something that H&M, a Swedish clothing company, has been criticized heavily for by investors to build up in inventory. Very bad. We see a practice from some of the clothing companies to burn inventory rather than to discount to protect gross margin. That's one way to do. You can do it on a sale, but maybe that will hurt your brand, as people might see it as a discount brand and you won't be able to continue to have high gross margins. So these are pros and cons that management has to think about and tackle, and we as investors can lean back and judge management on how they're doing their job, whether or not we think that the company is being run good, whether or not we want to invest our monies into these companies. Alright, that's been it, covering Foot Locker, the earnings. I hope you found value in me showing you some of these numbers, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.